Hey there, Lincoln here from bullacademy.org. Today let's talk about Robinhood and the fact that they have filed to go public and what that means for the markets, what that means for Robinhood, and after all that they went through with the GameStop saga and the SEC and going in front of the Congress to go testify about how their business operates and how they actually make money, and all the questions they're getting from retail investors asking, hey, your name is Robinhood, you're supposed to be taking from the rich and giving to the poor. What happened with GameStop? Why did you take from, or why did you seemingly take from the poor and give to the rich, with preventing buying of GameStop during a short squeeze? So everyone thought that Robinhood actually was going to pull their IPO ambitions because they were originally thought to be going public this year. But then after that whole debacle of GameStop and the AMC's and Wall Street bets, they decided that, hey, this actually turned out pretty well for us, despite us thinking that we should just pull our IPO. Let's actually go forward with it. And they filed confidentially to go public in what I believe to be 2021. So we have here a article on this news that was reported on Tuesday, March 23rd, which was, 2 days ago? So Robinhood has filed confidentially for their IPO despite disastrous start to 2021. And this article, I've read it, I've annotated it, so we're going to go through this, and I want to talk through what the author is saying here from CNN Business, and then give you my thoughts on Robinhood's future and what this IPO filing means, and whether or not I'm going to invest in Robinhood despite all of the troubles that they've been through. So thanks for being here. If you have any thoughts, comment in the live chat. I'll go through some of those later on in the live stream. But for now, let's hop into this article. And of course, I'm wearing my Bull Mentality sweatshirt here. It's actually getting a little hot, so I'm gonna take that off real quick. And on this channel, what we do is we invest for long term. So I have this shirt for the Bull Mentality. And the Bull Mentality, as you may know, we've been in for a while. The Bull Mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. And that's how we give ourselves the best chance of success on the stock market. And Robinhood gives us that opportunity to do that. And as retail investors, make it easier and free to do that. So I'm a big fan of Robinhood, and I am looking forward to this IPO. But I'm not sure if I'm going to invest yet, but I'll let you know what my full thoughts are as we go through this video. But before we get to this article and my thoughts, if you enjoy it, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts on Robinhood. And of course, leave messages in the live chat. We'll discuss that as we go. And if you want to help the channel grow and reach more investors, get more access to me, and discuss the stock market every day, the stocks and SPACs that we're all investing in, then join us over at patreon.bullacademy.org, where you can join our Discord channel where over 100 of us now discuss the stock market and share news and rumors and any ideas on new investments. And we've gotten in early on CCIV, SBE, ChargePoint, IPOB, and so many others. And it's been great just learning from the community and just collaborating. So I would love to see you over there at patreon.bullacademy.org. Let's hop into this video. So Robinhood files to go public confidentially, and what that means is that we don't have any numbers on this filing. We can't see any of the data yet, but hopefully within the next few months or even 7 months, apparently, we will learn more about the company's data and how they're actually doing through all of this. But my assumption is they're doing pretty well. So let's read this article real quick. I've gone through, highlighted some of the key points here, and I'll discuss them as we go through. So CNN Business says Robinhood has filed confidentially for an IPO on Monday. A person familiar with the matter said, and this is the development that shows that the trading startup is forging ahead despite a recent series of public relations nightmares. And in public relations, as they say, any PR is good PR, right? Good, bad is all good. As long as people are talking about you, that's good. So it might have seemed bad, but maybe it wasn't so bad. So the author is Matt, and Matt goes on to say the following, which Robinhood actually confirmed this report, and this is their article on their blog saying that, yeah, they're actually going public. So we can look at it later, but let me just keep on with this article. And Matt says that this filing demonstrates how confident the company is in its growth prospects, even after disastrous few months that featured a CEO getting hauled before Congress and Michael Bolton appearing in a viral video with Public, another stock brokerage out there, about the platform's controversial business models. And the confidential IPO filing suggests that Robinhood plans to capitalize on the flurry of retail trading that the startup helped set off with its zero commission business model. So as you may know, Robinhood is the one that pioneered the no commissions brokerage. Like, they don't charge you anything to buy and sell stocks on the stock market. And that may seem like a given to you. You might take that for granted, but it wasn't too long ago when Charles Schwab and TD Ameritrade and Fidelity would charge you a minimum of $40 per trade just to make a trade. $40 per trade at the minimum, right? So that's about 71% or 67% of minimum wage workers' whole day of work. You'd have to spend 67% of your income in a day to make a single trade on the stock market. And Robinhood came and said, hey, that's ridiculous. That just keeps the poor because they cannot invest in their wealth. So we're going to get rid of that. So that's why I like Robinhood. But let me actually lower this. This seems to be very loud. Maybe I'm yelling, but it seems very loud. So Robinhood came in and changed the game, and they've been rewarded hand over fist for that. So they've been growing very fast. And the author Matt goes on to say Robinhood has selected Nasdaq for their to list their shares on. So instead of the New York Stock Exchange, they're going with the Nasdaq, which is the tech heavy exchange. So that's what they're going with. And we can go on. Of course, that news was reported by Bloomberg. And of course, Robinhood decided not to comment on this with to CNBC or CNN. And Matt goes on to share with us some similar or high growth prominent startups that have gone public and have filed confidentially in the past, such as Airbnb, Lyft, Slack, and Palantir. And this route allows the company, like I said before, to privately file a registration with the SEC, the Securities and Exchange Commission, so that the public doesn't get to see their data just yet. We don't get to see any of their numbers on how fast they're growing, and that it's fine. They get to file their paperwork, and while they're doing that, they can gather their data and make sure that they have it in the form that they would like to show to the public. So I'm sure they're massaging their numbers right now, but we'll see hopefully in a few months what those numbers are. So eventually, the author Matt goes on to say, eventually Robinhood will be required to release those numbers so that investors can evaluate the company's growth trajectory and key risk. It will be at least several months before the S1 is made public, and once that is made public, we can see how Robinhood is doing, what the revenues are, what the projections are for the future, how fast they believe they can grow, how many users they have, how many users they plan to gain in the future, and we can decide if there's what the risks are, and we can look at that and see if we think that it's a good business to invest in, and if there's greater upside than there is downside due to the risk, then it might be a good investment. So we don't know yet, but we will see. All we can do now is speculate, and of course we have some numbers to go off of, and we'll discuss those soon. So I do have some numbers here that I want to walk you through that I've covered in the past in previous videos, but we'll get to that in a second. So GameStop, Matt goes now to the GameStop Sega, where we start off a cash crunch. So Robinhood got into a whole debacle, and we're going to read about that now. So Robinhood set off a firestorm in January when it temporarily banned users from buying shares of GameStop and other stocks, driven up by an army of traders on Reddit. So Wall Street Bets, that community drove up the share price of stocks like GameStop and AMC and what was it, Bed Bath and Beyond. So companies that you may not have heard of in quite some time, especially thanks to the pandemic, where no one's going outside, can't go to the movies or go buy games at a brick and mortar store, since everyone's buying their new PS5 and you can just download the games now, right? Same with the PS4 and the Xbox One and the whole new Xbox system. So people somehow they found GameStop and they said, hey, we're going to go and buy that, and they drove it up. Robinhood couldn't handle that, so they had to shut it down. So Robinhood blamed the controversial restrictions on a demand from its clearinghouse to put up as much as $3 billion due to market volatility. So when you make a trade on the market, Robinhood has to cover that. They have to put up the money to make sure that when that trade goes through due to volatility, that they have enough money to cover that trade. So especially if you're using margin, right? So their clearinghouse said, hey, you need to put up more money due to how volatile these stocks are. And Robinhood had to go raise the money to make sure that happened. So Robinhood was forced to rapidly draw down on its credit lines and swiftly raise $3.4 billion pretty much overnight, underscoring the apparent liquidity crisis facing the startup. And people got a little concerned when Vlad, the CEO, came out and said, hey, we don't have a liquidity problem. We just had to do this preemptively in case things go bad. So then he lost some trust with the public because maybe, although he might be saying the truth, it didn't seem like he was telling the truth at the time. So that was a whole misstep on their part. But Matt says the episode raised questions about Robinhood's business model and management team and tested the brand's loyalty among users. So many users have turned against Robinhood because they don't no longer trust the CEO and the management teams and the decisions, and they believe that Robinhood didn't act in their best interest. I have my own thoughts on that, but we'll get to that soon. So Robinhood was sued. Robinhood was sued earlier this year by the family of a 20-year-old trader who died by suicide after he saw a negative balance of $730,000 in his trading account and mistakenly believed that was a sum of money that he owed. The tragedy drew attention to the gamified nature of Robinhood's platform and the startup's customer service shortfall. So yes, this is a big problem that Robinhood has. They don't have an easy customer service offering for their users. If you need help, you need to send them an email and hopefully they get back to you in a day or two. That's not great. For another brokerage that I use, SoFi, if I need help with customer service, I just call them up and say, hey, I have these questions. How can you help me? And they have a human answer the phone. Robinhood should offer that, but they don't. So that's not great. And that leads to tragedies like this because people freak out when they see things that don't make sense to them. So yes, that's a big risk for the company. Then Matt goes on to red hot markets. Under normal times, Robinhood stumbles might doom an IPO, Matt says, raising questions about whether the company is ready for the limelight. But these aren't normal times. We have rock bottom interest rates combined with surge in interest from retail investors like you and I, and optimism about the economic recovery have set off a boom in financial markets. U.S. stocks are trading near record highs, valuations are lofty, and signs of market froth abound. So yes, we're all up way more than we would be in normal times because there's so much hype in the market. There's so much easy money. The Fed is just pumping money into the markets because we have to support the economy and support the financial markets in this on normal times in the pandemic. And we went through a recession last year. That was very brief, but we went through a recession. And the only way we got out of that was thanks to the Fed. The Fed said, hey, we have to support these markets so that we don't have worse days than what we had in March and April. So yes, there is a lot of money out there, and we've been seeing corrections over the last few weeks. And even today, this morning, we did a whole live stream on the markets just keep going down. And yeah, it hasn't been pretty over the last month or so. And my portfolio is down about half its value. So yeah, there's been lots of volatility in the market. And Matt goes on to say investors are pouring money into blank check companies known as SPACs, special purpose acquisition companies, which we've covered a whole lot on this channel. And if you don't know what they are, go watch one of our videos or watch all of them if you want. And he says there's a trend that's recently been backed by professional athletes and other celebrities. So Matt is one of those people who don't seem to understand SPACs very well. And he is just throwing around talking points. He says here that it's been backed by professional athletes and other celebrities instead of saying that there's prominent investors like Bill Ackman and Jamal Palihapitiya and Foley backing these SPACs. He wants to go and do the clickbaity uh, statement here. So yeah, there are celebrities out there who are backing SPACs, but you don't have to invest in them, right? There's going to be celebrities in anything there that has money in it. As long as there's money, you're going to have celebrities there. So him saying this is just doesn't make. I wouldn't choose to use this statement in my piece. But moving on, traditional IPOs, Matt says, are also very hot right now. Yes, we have Snowflake, we have Airbnb, we have who else has come out recently and just going on DoorDash. Every IPO with a big name is just going through the moon, right? To the moon. So yeah, the markets are very hot. Of course, we've been cooling off a little bit, but there's still a lot of interest in investing in the markets, and that's good. But when we start going down, people start to run away, and that's when it turns very bad. But Matt continues saying that U.S. listed traditional IPOs have raised $34.9 billion so far in 2021, nearly 5 times what they raised through the same period last year. That's amazing. That's the highest point for any year since 1995, or highest for this point. Yeah, that's a lot of money going into IPOs in just a quarter of the year. So we've seen the highs and we've seen the lows, and I don't know how much further we can go, but let's continue with this. Almost done with this article. And he says that over the past 6 months, major companies including Coupang, Bumble, Snowflake, Airbnb, DoorDash all have skyrocketed in their first day of trading. This is the IPO pop. I've covered this in previous videos. And the average first day pop for the US listed IPOs is 44%, the highest since the dot-com bubble in 2000. That's not good. When you compare anything to the dot-com bubble, it's not great, right? So there's a lot to talk about with the IPO pops, and Robinhood will probably go through that too. When it IPOs, there'll probably be a whole bunch of hype around Robinhood's IPO, and I probably would avoid that. You don't want to buy the hype. You want to avoid the hype as much as possible, because if Robinhood comes out at say $20 per share and there's hype in the media and everyone's excited to buy Robinhood, then it might go up to $80 per share or even $100 per share within the first hour or two. And that might not be justified. So if you buy at the top of that and it comes back down, you might be down for a very long time. So that's the issue here. And Matt finishes by saying a key question for investors scrutinizing Robinhood's books will be how its explosive user growth was impacted, if at all, by the GameStop saga. Despite the controversy, January was a near record month for Robinhood app downloads, according to a late January report by JMP Securities. So, yes, Robinhood, in my opinion, what I'm looking at, and just through their app downloads and Twitter and all of the different communities that I am a part of, it seems there's more people using Robinhood than there are leaving Robinhood. So people say, Robinhood acted badly to retail investors and I'm leaving, I don't trust them anymore. But what people don't realize is that Robinhood, it is pretty much the same as all the other brokerages. They all do the same thing. Payment for order flow. We've discussed this in the previous video and broken down how that whole system works. So if you don't understand that, you should go watch that and understand how Robinhood makes its money. And that way you don't just get misled by people saying, Robinhood is the worst brokerage out there. So for me, I like Robinhood. I think that they've been a net good to the stock market and for retail investors and for the average person who wants to invest and build wealth for the long term. So I personally will most likely be investing in Robinhood once it goes public. And that's because I think that they can continue to grow their user base and at a very fast rate. And as they grow, the more volume they have, the more money they can make from payment for order flow, but also from their cash management, from their margins, from their options. They've been able to make a whole lot of money on options trading, payment for order flow in the options arena. And I think they're just the best brokerage out there when it comes to usability and just enjoyment, just delight as a user on the platform. So Robinhood's been good to me. If I was a day trader or a swing trader, maybe yeah, I would not be as happy about what they did with the GameStop saga. But I don't day trade, I don't swing trade. I'm a long term investor, so I just buy and I hold. So and I only buy companies that I actually believe in and plan to hold for the long term. So I wouldn't have been in the GameStop, and I wouldn't have had an issue of being limited on buying GameStop. Of course, all of that spilled over to the rest of the market, and that caused other volatile stocks to get limited, such as CCIV, and I believe IPOE had limits on them too. But that was a very flat or what's it called, anomaly in the market. So I don't see too many problems with Robinhood in that arena, but I do want to see what their numbers are and what they're projecting for the future, and then I can make my decision. So if you're investing in if you want to invest in Robinhood, I would love to hear your thoughts on Robinhood and what you think that they could do in the future. Or if you're not, I would love to hear why you don't like the company as an investment or just as a company as a whole. So let me look at the live chat real quick. Only got one comment so far saying checking in from Maryland. And good look on the stream. Thanks, Brian. I appreciate that. Brian forehand. Thank you for your comment. So yeah, that's my thought on Robinhood. I think that I do have a little bit more actually. So I do like that I did a video a few months ago on their revenues from payment for order flow. They make about $400 million from payment for order flow in a year. That's a lot of money just for fulfilling orders or sending orders to a market maker to fulfill. They make about $500 million just from that. So I do want to see how much they make from their cash management, from their margin loans, and from other revenue streams that they have planned for the future. So if they're a fintech company, they have many options for revenue streams that they can develop. And of course, they have free marketing. If they continue to centralize their services and they offer more services to customers like SoFi does. So SoFi says, hey, you bank with us, you save your money here, and you have a checking account here. Do you also want a personal loan? Do you want a home loan? And do you want a credit card? Right? So they can do all of those things for free. It's free marketing. If they have a new product, they can just say, hey, we saw that you are doing very well on how much money you have coming in every month because of direct deposit to your bank account. Here's another service for you that will help you be more financially free. So I think Robinhood can do similar things where they can centralize their services, have it vertically integrated, and have pretty much free marketing so they can grow for free. Free revenue is wonderful, right? And I think Robinhood can do exactly that. So with them pioneering the zero commissions trade, let me go back to my picture here so you can see what I'm looking at. So they pioneer zero commissions trades, which is great. They have that goodwill with the market, and they have a growing user base. We can actually take a look at Google Robinhood app. Let's see. Let me see. Google Play. Just want to take a look real quick at how their Google Play store rating is doing. Probably not great because of the Robinhood era, but before that, it was pretty good. But it's been slammed, as you can see here, by the GameStop folks, who were not very happy with it. So yeah, that's not great. I'm not a huge, don't feel good about that, but I think that they will be fine once all of this blows over. Let's see how to look on the App Store. Let's see, Robinhood. So as you can see, people on Apple are not as finicky as those on Google Play Android. They still have a 4.1 star rating here with 3.3 million ratings. So they're doing just fine. I think the App Store rating is a lot more representative of their actual ratings in the market. So yes, it was not great what they did, and they've got some blowback. But they did get a whole lot more users when they had all that attention on them. They were in Congress. They were on CNBC talking about their business and how it works and making their case. They were on YouTube channels, right? They went everywhere. They were on a whole PR spree. So they got the word out. That was free marketing for them. Everyone said, "Hey, come talk to us. Come tell us what happened." And Vlad went out there and said, "Hey, this is Robinhood. This is what we do. This is who we stand for. Yes, there's misconceptions, but this is what we believe that we are and how we make our business works or our work." So they are becoming, or they already have been a household name, and they're doing for stocks, the stock market, what Airbnb did for rentals. Airbnb said, "Hey, anyone can become a hospitality professional. If you have an extra room, you can rent it out to anyone, and we'll handle the payment processing." So everyone got a chance to monetize their home. Now Robinhood is saying, "Hey, everyone can invest, and for free. Anyone can invest. If you have a phone or a laptop, just go to Robinhood.com and you can invest 10% of your income every month, and it's free." So I think that is undervalued. That just that household name is undervalued. When Robinhood goes out for their IPO, they're going to get a whole lot of hype, despite all of the hate that they got recently in the GameStop saga. So I feel good about Robinhood. I really do hope, though, that they fall flat on their IPO day so that I can buy for cheap, because I'm a long-term investor. If I can get Robinhood for a cheap price and hold them for the long term, that's better for me as a long-term investor. So I don't want them to pop. I want to see them. Hopefully they go negative on their first day, so that I can just keep buying them up, because I think that based on just what I know about the payment for order flow revenues, I feel good about their finances for the future. Of course, we have to look at their margin, their profit margins, to make sure they're actually going to be profitable at some point in the future, hopefully near term, midterm. But I believe that they can actually pull it off. And of course, as you grow your business, you're going to spend a whole lot of money, so your margins are going to be low. But once you reach a point that you're happy with, you can start to minimize your expenses so that you can bring in more profits. And that's how you can become profitable. So like Amazon was spending all the money they brought in for a decade or so. And then whenever they want, they can just turn on profits, right? And they print money with AWS, Amazon Web Services. So there's ways to become profitable. And if your business is good enough, you can choose when you want to become profitable. So I think Robinhood is going to have that same opportunity to choose, hey, we're going to keep growing for a while. We're going to keep bringing in millions and millions of users. And at some point, we're just going to turn on the faucet and bring in the profits. So those are my thoughts on Robinhood, and I would love to hear your thoughts, of course. Take a quick drink, and let me read some live chats here. So Brian says, payment for order flow is small. What is this? SBMM of the equities market. SBMM. What am I missing here? Have not seen the acronym before. Skills-based matchmaking. Interesting. I think that's what you mean. But Brian, do clarify for me. I apologize for not understanding this SBMM, just to make sure that I know what you're referring to. John says they are building out a platform to allow their users to participate in IPOs. Did not know that. Is that Robinhood, John? That's very interesting. And John also says it'll be interesting to see if they take other exchanges lunch once they allow the withdrawal of crypto. So yes, crypto, they have found a way to make crypto trading super easy, just like they did with stocks. They made it super easy to just go on and buy stocks and sell stocks. And as well as options. They get paid very well for options trading by their market maker friends. So they've done the same thing with options trading. You can just go on Robinhood and say, hey, I want to buy Bitcoin. And just like that, you just buy it. No need for an extra wallet or anything. You can deal with that later, but just buy the Bitcoin and just go about your life, and it's right there. So I like how easy they make everything. Same thing with their cash management, right? So you can have cash. So yeah, Robinhood has made everything easy, and they can continue to do that. And yes, unless yes, John, they can take the lunch of other brokerages and exchanges as well. So let me see what Brian said here. Brian said another broker wouldn't even let these degenerates have their fun in the market. Yes. Uh, Once they allow that, there is no need to go to Coinbase. Oh yes, that's completely true. John says that you cannot withdraw to your hardware wallet though, and once they allow that for crypto, you don't need to use Coinbase anymore. They can just take Coinbase's lunch as well. So I don't understand crypto too much because I don't see any value in it, but I do see that people love it, and if Robinhood can be the one to make that easy, that's good for those who believe in Robinhood. So yes, that's another reason to be bullish on Robinhood. If they can just make anything easy in investing, they have a long-term life ahead of them, a very promising future. So that's all I have to say for now on Robinhood. So if you enjoyed the video, thank you for being here, and I hope that it was insightful in the least. And let me know if you're going to invest once this whole IPO does take place, hopefully later this year, maybe in the summer or the fall of this year. And if you enjoyed it, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts on Robinhood, like I said. And if you want to help the channel grow, reach more investors, and get more access to me, and get direct answers to your investment questions, then join us over at patreon.bullacademy.org. That's where we discuss the stock market in real time in our Discord channel and share our news, rumors, and just new investment ideas so that we can all make better decisions, do collaboration, do our own research, and of course come back and help one another think about these investment ideas so that we can build wealth together. So that's what we do in the stock. That's what we do in our Discord channel, and I would love to have you over there. It's about 100 of us now, and the more the merrier, right? So come in and let's do this together. So thank you again for being here. If you enjoyed it, you know what to do, and I'll see you in the next video. I'm Lincoln with bullacademy.org.